Shares of Delta falling in overtime. News breaking moments ago that the airline is lowering its first quarter guidance after seeing softness in domestic demand. Joining us now on set is Delta Air CEO Ed Bastian and our own Phil LeBeau. Phil.
John, thank you very much. Ed, thank you for being here. It's good to see you.
Good to see you, Phil.
I think the main question that I think a lot of people have is softness in domestic demand. That sounds pretty generic. What does that mean? Where are you actually seeing the weakness?
Well, we'll be here tomorrow in New York at an investor conference, so we'll be presenting and get into a lot more detail. In fact, I think I'll be speaking at 7:30 in the morning, so I'll have a chance to get through that. But at a high level, first, the first quarter is always the seasonally most difficult quarter of the year for our industry and historically somewhat tough to project. You couple that with the fact that we entered the quarter with high growth expectations. We finished the year strong. We were up, in the fourth quarter, a meaningful amount. We anticipated an 8% growth rate in terms of top line. We're going to come in on a 4% growth rate. So it's not going backwards, but it's not growing as fast as we were anticipating. We know that GDP is one of the most important factors that our industry is correlated to. We saw in February a pretty significant shift in GDP sentiment and the output and the confidence signals that we monitor. Consumer confidence is kind of coming down a little bit, as we all know. That's why the market is in the challenge it is. And as a result of that, we saw companies start to pull back in terms of corporate spending, started to stall. Consumer spending started to stall, largely domestic, largely in the close in. But it was also exacerbated as, the uncertainty that's out there. And consumers in a discretionary business do not like uncertainty. And while we do believe this will be a period of time that we pass through, it is also something that we need to understand and get to calmer waters.
Let's split these two from the consumer and the corporate CEO. And I want to talk first about corporate CEOs. You were just with a number of CEOs this last weekend. Who are the industries, or what are the industries, that you're noticing the biggest pullback in demand right now in terms of bookings? And what are they saying about their concern about the macro environment and the uncertainty that's out there right now because the policies in Washington? We know in a broad sense what the president wants to do, but we're a long ways from seeing these things put in place.
Yeah, they'd be the industries you'd anticipate. It'd be aerospace and defense. It would be autos. It would be the media, entertainment, and tech space. Where there are places where people just aren't quite sure what's going to happen, companies are pulling back. But we also, at the same time, it's not just corporates. At the same time, we also had the impact of the aircraft accident that American experienced at the end of January. And then we had our own Toronto incident that was also happening all around the same time. So these events somewhat exacerbated the impact on us. So it's not just corporate and consumer. It was also a question about safety in our industry.
Sure.
We do know it's safe to fly, and we do see that starting to dissipate. All these factors had a compounding effect that led to the size of the impact, which we're talking about is about a $500 million impact in the quarter. Given
the fact that government spending is being slashed in Washington, is that impacting your bookings right now?
I'd say to a modest degree. The government contractors, the aerospace and defense business, certainly the employees that feel threatened as to whether they're going to have a job are not out there spending money traveling. That said, we're looking at this as the weakest time season of the year. We're starting to head into spring. We're starting to head into the summer. I think we'll have a much better handle on this. I think a lot of the impact we saw in the quarter is transitory, that we'll push through. The other thing that we had is our inventory systems were booked and anticipating that we would start to see a strong close-in demand, higher pricing yield that never showed. So we had to recalibrate our systems all during the quarter. All these factors we're working through. So of the $500 million, I feel optimistic that at least half of that is transitory as we start to go into the second quarter. And then you look at the other side of it, oil prices are also down by $10 a barrel.
Which certainly benefits you.
Which is why we're not changing our full year forecast.